Okay, next we're going to welcome onto the stage Anrich Daseman. He is going to talk to us about the regulation of cryptocurrencies in the South African context. He's from the South African Reserve Bank, where he's a senior fintech specialist. And Anrich currently is a member of the BIS working group on digital innovation and a member of the Intergovernmental Fintech Working Group, which is a collaboration between 4 departments within South Africa. It's the SARB, the FISCA, the Financial Sector Conduct Authority, the FIC, and National Treasury. So please welcome onto the stage, Anrich. Thank you.
All right. Good afternoon, everyone, and thanks again to Tanya and Sonia for the opportunity to speak to you today. This is my second time that I'm speaking at the conference, and usually when I come here, I'm a bit nervous of what exactly to say, because within the different regulation or different working groups, there's different regulatory authorities, and I'm not always sure exactly what we're allowed to say, what we're not allowed to say. So even in last year's presentation, you would have seen that it was very generic, and hopefully today I can provide a bit more clarity. I was speaking to a newfound friend there at the back, and he told me, "You are the gray area." So, so hopefully today I can move out of that gray area and provide a bit of clarity to you guys. As Tanya mentioned, I'm part of the fintech unit of the Reserve Bank, but I'm also a member of the Crypto Assets Regulatory Working Group. And it's a structure underneath the Intergovernmental Fintech Working Group, specifically formed to look at the regulatory framework surrounding crypto assets. So we've been journeying on this path, I think, since middle 2018. The documents you would have seen that we released was a consultation paper last year. And the intention is that the consultation paper would have provided further input to the eventual policy paper that should be released. So I recently got married a year and a half ago. And in that journey, I got to hear about the 3 C's. So I developed in buying the ring and so forth. So I developed my own 3 C's. The first one is clarity. Second one is, I forget my own C's, is coordination. And the last one is consistency. So for me, I think in coming up with the different regulatory frameworks, those 3 pillars are key for advancing the specific regulatory frameworks. We need to be clear about what the regulatory framework is. When we implement those regulatory frameworks, we can't do it sort of in separate boxes. It needs to be coordinated across different regulatory authorities, and the message and framework that should be implemented should be consistent. And I think hopefully today I can bring you a bit of more light on our thinking. You would see as well at the start of my presentation, I said the regulatory considerations. So the policy paper that we intend to issue isn't the final paper, but it's the regulatory considerations that we as the working group provide to the specific regulatory authorities. And it's then the regulatory authorities that implement the regulatory frameworks. But the recommendations that we come up with gives broad guidance on where the regulatory framework should evolve to. So there's 3 things I want to cover in getting to that clarity. First, what is crypto assets for us? How do we see it as South Africa and as the different regulatory authorities? The second one is, why are we looking at it? What's the risk that we see that perhaps some of the other entities do not see? And then the third one is, how do we regulate it? And I think that's probably the most important thing that you as audience members want to know from me today. And then I'll briefly discuss what's the way forward. As I mentioned already, we're in this process of getting to this policy paper. So firstly, I think everyone knows there's been a lot of developments on crypto assets. When I did the presentation last year, I think there was about just over 2,000 different crypto assets. When I checked last night, there's 5,100. So the market is definitely developing. It's growing at a phenomenal pace, as you can see in the chart as well. Maybe it's not that clear. But I think the message to you today is crypto assets isn't going anywhere. And I think just by us establishing a fintech unit, establishing this regulatory body to look at the regulations on crypto assets, we are acknowledging as well that cryptos are here to stay. It's growing, and the way it's growing is also something that we need to look at. So if we think of cryptos, and back to my presentation of last year, I gave a sort of jurisdictional scan what other countries are looking at. So a lot of countries has implemented different type of regulatory frameworks depending on how they classify it. The first and most common one is a currency. I mean, the questions today as well, and even from the lawyer's presentation on the currency effect of crypto assets. The second one is a commodity. Lots of people say that this can be akin to gold. Why don't we just treat it as a commodity? In countries like the US, for example, some are classifying it as a security as well. The last one is then a payment system. That people are saying, look beyond this Bitcoin, what it's actually doing is it's a payment system being independently developed. So how do we as a country then look at it? With different classifications done by different regulatory bodies across the world, how do we get that sort of clarity on classification and what should be the treatment for that? And I think the classifications probably come from two areas. The use of it, how it is used, and how the second one is how the value is derived from that different crypto asset or token that's being developed. So for us, this is the adopted definition for crypto assets. It's a digital representation or token of value that is not issued by a central bank. And I just want to sort of pause there. So what we're saying is, in the previous slide, you could see that it could be seen as a means of payment used as a currency, but it's not legal tender in our sort of perspective. But it can be used for payment, investment, or other form of utility. So what we acknowledging that people use it differently for different purposes. We've now adopted the term of crypto assets, and we see it as the umbrella term for the different uses of tokens. So we acknowledge that it can be used for payment as an exchange token, that it can be used, for example, for capital raising for investment purposes, and there's other sort of type of utilities that you can get from it, access to certain goods or products, predominantly based on DLT platforms and so forth. So we're saying that it's got these different characteristics, and that it's not one thing. But does that give us clarity on what the regulatory framework should apply? So just taking the exchange token and pausing on the fact that most people can or want to classify it as a currency. So I just wanted to bring perspective of how we see the crypto asset and specifically on the exchange token. So some of you may have heard of the money flower. So what the money flower is it's a representation of or characterization of money. And money has sort of four specific characteristics. The one is the issuer, So is it issued by a central bank or any other entity? The second one is the form. Is it in a digital form or a physical form? The third one is how accessible it is this currency or token being used. Is it widely accessible, meaning it's retail users, you and me can use it, or is it only restricted to a certain group, for example, commercial banks? The last one is then the technology that's used. Is it token-based or account-based? The main difference there is then how is that token being confirmed. So I think for us important is how we then see the what we call then the private digital token. So we're saying it's not issued by the central bank, but it is widely accessible, meaning anyone can use it. It is in a digital form and it is token-based. So for us, that classification is clear that there's some acknowledgement that it can be used as currency, but we do not see it as legal tender. So then, now we have this broad classification of crypto assets. And as I said, that doesn't necessarily assist us in saying what regulatory framework we could apply. So what we've done is we've then interrogated the different tokens and defined the different use cases, meaning what activity is being performed when you use that crypto assets. And we've identified these 5 different use cases for crypto assets. So the first one is just buying and selling crypto assets, usually done through an exchange, for example, or peer-to-peer transfers. The second one is when you use it as payments. I can go to Pick a Pay, for example, and buy bread with it. The third one is then what we call ICOs, initial coin offerings, where you can use it as a means of capital raising. The fourth one is derivatives and funds, where you use it in some type of investment vehicle. And then the last classification or use case is what we call market support. So market support is support activities related to crypto assets. If we would identify 3 different specific activities, mining would be one of those activities. Safe custody, for example, and then wallet provisioning. So those are the support activities we see within the crypto asset space. So now we've got the broader classification. We've identified the different use cases. So why do we still then want to regulate it? So we've identified, there's other risks as well, but I've highlighted about 7 specific risk as a regulator that we would look at. And the first one is monetary policy. And of course, as a reserve bank, monetary policy is key to how we execute our responsibilities. So if, for example, there's a mass migration from fiat currency to crypto assets, that would have a major impact on how we execute monetary policy. The second one is the national payment system. If it now becomes the default means of payment, firstly, monetary policy would be voided, and then all the regulations and systems around our national payment system would also be wasted. Because if people use crypto assets, why would we still then need the national payment system department? National payment system systems in place. So we do foresee that it could be seen as creating a what we call a parallel and fragmented payment system. It doesn't mean that it cannot live together in one world, that it's just one or the other. The third risk that we highlight is financial stability. As the chart showed that the value of crypto assets has grown astronomically, there has been some sort of stability in the value. But I mean, if the market capitalization is at $222 billion, it does not mean that it can't grow exponentially in years to come as well. What also would be a concern for us is the impact on the existing financial system. If banks, for example, decide to have mass exposure to crypto assets, and that would have a triple effect on financial stability as well. The last one is then exchange control regulations. And I know for many in the room, this is probably a sore point. Many feel that we shouldn't have exchange control rules. But the reality is there are still existing exchange control rules. The reality is as well is that people may use crypto assets as a means of circumventing those exchange control rules. So that is a risk that we need to look at. The three others risks that I've identified is consumer and investor protection. I mean, many of you are aware that there's various scams being developed around crypto assets. It doesn't necessarily mean, for example, that Bitcoin is a Ponzi scheme, but people create schemes around the crypto assets. And that creates the false impression that the crypto asset itself is a means of illicit activity. And currently, as we know, our existing stance in terms of crypto assets specifically is there is no regulatory framework. When you conduct activities in crypto assets, you're doing it on your own behalf. There's no recourse back to the regulator for this. And I think that is a gap that needs to be fulfilled. There needs to be some consumer education as well upon the different risk that's manifested in the crypto world already. Market integrity as well, that the market that's evolved now should be fair and safe, similar to our existing financial system. The last one is money laundering and terror financing. As I mentioned, some of the entities are using crypto assets as a means of laundering money. We have seen various cases of this. Within the Reserve Bank, we have our Financial Surveillance Department. They have hundreds of transactions that's already been investigated for money laundering, where it's now moved from normal fiat currency, that they just open a sort of trading account and they use it as a means of laundering money as well. So we've decided to focus on three specific risks that I mentioned. And I think that's for us the most pertinent risk in crypto assets for now. It doesn't mean, for example, that it's not an issue of financial, it could be an issue of financial stability, for example, in the future. But for us, these three risks were the main risks that we want to address in the immediate future. So it's anti-money laundering and terrorist financing. Second one is consumer protection. And the third one is addressing some of the what we call regulatory arbitrage, where there's existing or gaps in the regulatory frameworks. And an example of that could be the exchange control rules and the regulations, that it's not consistently applied to, for example, crypto assets as in the fiat currency world. So knowing now how it's classified, knowing the specific risk that it's introduced, what is the process that we've embarked on as IFWG to get to this clarity, to move out of this gray area? So this process of regulatory review has started already in 2018, as I mentioned. So originally, we just wanted to understand what are the different use cases, how is it used, what are the risks, what are the benefits of crypto assets. And that resulted in the consultation paper that was issued last year. So now we've taken the consultation paper, got the different feedback from industry stakeholders, and we're at a point where we want to issue this draft policy paper. The policy paper will lead to the eventual regulatory framework. And this is probably the most important slide of the whole deck. So what are these main policy recommendations that we've put forward to IFWG? So how we've developed the paper is there are these main recommendations, and then there are specific recommendations for each of the use cases that we've identified. But I think these recommendations are the most important recommendations that we would capture. As I say, it's currently in draft format. That means that the paper will be issued to the public for input, and then a final, after probably 2 months or so, a final paper will be released. And then the regulatory institutions will implement the regulatory framework. So the first one is, and the approach that we've taken is that it should be risk proportionate, meaning we're not coming up with these recommendations just for the sake of coming up with recommendations. It should be proportionate to the risk that it introduces. So the first one that some of you may already be aware of is that crypto assets will be regulated for AML CFT. The Financial Intelligence Center are already busy amending the schedules of the FIC Act. That means that all crypto asset service providers will now become accountable institutions, and they will have to implement AML and CFT rules. In the paper, it describes who the entities are that included in this net of crypto asset service providers, but you can think, for example, it's an entity that's involved in the trading of cryptos, if it's from fiat to crypto or crypto to fiat. So it's the trading platforms. It's entities that provide safe custody, for example. It's entities involved in ICOs. But there's a specific list of various entities that we classify as crypto asset service providers. The second one is, and this is also a big one, is that crypto assets will be declared a financial product or service. There's still a bit of debate on whether it should be firstly a product and then you will be rendering services in relation to that product, or if it can be just designated as a service. And that clarity we'll probably get within the next couple of weeks, month to come. Coupled with that is which regulatory framework will then apply. Some of the considerations is the Financial Sector Regulatory Act, the COFI bill, and to a lesser extent the FMA. FMA, we do not think, Financial Markets Act, we do not think necessarily that will apply, because it mainly applies to securities and so forth. And as we said, we do foresee crypto assets as broader, and that's why we're thinking of probably either FSRA or the COFI Act. The third major recommendation is that we will implement an exchange control regime, meaning some of the crypto asset service providers, like trading platforms, will have to adhere to certain exchange control rules. They will have to get a license from the Financial Surveillance Department to conduct certain activities. The fourth one is we do not foresee for the immediate period that financial market infrastructures should interact with crypto assets. What that basically means, for example, if you think of payments, that settlement should not happen in crypto assets. That settlement should still happen in fiat currency. The fifth one is that we will implement a monitoring program with the different regulatory authorities. So it's not just a case of these are the regulations and then you need to adhere to. We'll continuously assess the market and see if there's different use cases coming up and how we should evolve that regulatory framework. Sorry, my time is up. So briefly, the way forward, as I mentioned, we've got regulatory approval between the different stakeholders. We now need agreement on the specific regulatory framework, and we've got in principle agreement on what that framework should be. It's just which specific regulation should apply for that. We hope to publish this draft paper our initial thinking was at least by end of this month. That may be prolonged, but it's within the next month or two that we'll issue that policy paper. So please, if you see the policy paper, feel free to comment. We value all your input that you may receive, that you may provide to us. Part of getting to this policy paper, we had specific industry workshops as well, whereas the crypto asset trading platforms and some of the banking institutions were involved and provided input on our existing policy recommendations. As I said, all those recommendations are included in the eventual policy paper that we want to issue. I think that's it from my side.
Anrich, thank you. You're not off the hook yet because people are WhatsApping me saying, please let me ask him a question. That's how in demand it is. So are there any questions from the audience? And then you can all guess who's WhatsApping me. Okay, let's take one here and then I'll take another one.
How's it? I've always looked forward to talking to a central banker. So my question really is, Bitcoin's main value proposition is protection against monetary debasement. And therefore, its biggest threat really is sound monetary policy practiced by central bankers. So really, has there been any kind of like aha moment in terms of a realization around the fact that devaluing your currency is leading to benefiting certain cohorts of society over others?
How do you answer that?
The press is here.
I think the sort of the approach that we've taken is I mean, there's no sort of intense introspection of the existing process of the financial system. What we do foresee is that crypto assets does play a role. We don't. It's for us, as I said, I don't think it's an either-or situation, and there is going to be room for crypto assets, but I don't necessarily think that banning crypto assets will sort of provide this I don't think the current financial system would be weakened by introducing crypto assets. And I don't think the current financial system is biased to any other activity being introduced. It probably doesn't answer your question fully.
That's perfect. Thank you very much.
Okay.
Okay, there's a question at the back.
Can you hear me? Yeah. My question relates to Bitcoin futures, cash settled. So the CME has been doing this for 2 years quite successfully. So my question relates to if the JSE was to make available a cash settled Bitcoin future, which means, just for everybody in the room, there's really no Bitcoin involved, just exposure to Bitcoin. Are we subject to this upcoming clarity in the regulation, or do we have enough regulations in place to govern that financial instrument?
Or
in other words, if I come to you tomorrow to say the JSE wants to do this, what would you tell them?
So probably part of the recommendation is on the FMI interaction. So the way the FMA defines FMI includes the JSE as well. So for the foreseeable future or near future, we don't foresee that the JSE would get involved in such activity. But linked to that, one of the use cases that we identified is the derivative use case. So we do foresee that there's some space for it to happen, but it's not necessarily a JSE that would play a role in that.
Sorry, can you clarify that? The JSE runs most of the derivative market in South Africa. Why would we not be included in that? Sorry, but that's a fair question, I believe. You said it.
I think for us, it's the possible risk that it could introduce in the market. And as I said, this position might change, but for the immediate future, we do not foresee that such entities would get involved in that market.
But you are saying that other entities could get involved in that?
Yeah.
Okay.
Let me jump in also. I think one of the issues is in the FMA, right now that only governs securities, but any financial market infrastructure in terms of the FMA, if they want to engage in any new business, there's a separate section in the FMA that specifically refers to that, and then they ask that you go and engage with the FISCA on that. So it would probably fall under that section of new business. If Bitcoin is not classed as a security, which it isn't, it would probably fit in there and be open to an engagement with the regulator.
Sure, but what I'm hearing is it wouldn't be the JSE going to that meeting.
Sorry?
I'm hearing it wouldn't be the JSE going to that meeting, so somebody else would have the opportunity. I'll take it offline.
Okay.
Please stay around. I would like to clarify. Thank you.
So,
Okay, yes.
my question relates to the closing of an account by FNB, a Luno account. So I just want to understand the position of the central bank in terms of banks closing accounts for businesses. Is that even legal, and what can be done to prevent such acts from happening?
Are you asking if it's illegal?
Yes, if it's legal for a bank to just willy-nilly close an account.
So I think, we've had the Gupta case, for example, and our stance as a regulator has always been that we will not intervene with the relationship between a financial institution and its client. So if the bank decides to close those accounts, it's upon their risk assessment. Some of the reasons that they provided was that there is no regulatory framework. And hopefully through this process, they would see that there is some regulatory framework that's forthcoming. If they still decide to keep those accounts closed and not provide bank accounts to these institutions, it's their own risk assessment and risk appetite. It's not as a result of our interaction. So we can't force banks to keep those accounts open.
Okay, so we have a Consumer Protection Act. I don't know if it covers what banks can do. So as a consumer, if a bank decides that they're just going to close my account, what recourse do I have? Because there's an opportunity for the banks to abuse that.
You as the consumer would have a relationship with a Luno, for example, right? And it's up to Luno to provide those facilities for you.
No, I'm talking as a business owner myself. Like if I was a business and then a bank just decides they want to close my account, what can the central bank do? Because clearly that can be open to abuse if a bank can just close an account.
Yeah. We definitely took a definitive stance that we will not intervene. All that we can do is provide the sort of regulatory clarity that's within our scope.
Okay. Thank you.
Okay, all right. You know what? There's one more question I'm going to take, and then Anrich, I'm going to let you off the hook. Are you sticking around?
Yeah.
Okay.
There are other members in the audience that's part of that regulatory working group. I'm saying there are other members.
Okay, so there's many people here part of IFWG. So if any of you would like to volunteer to support Anrich in asking questions, he's open to it. I think there was one at the back there that I indicated I would take.
Anrich,
last question.
Pleasure to hear from you again. So I just wanted to know if you could just unpack the Fintech regulatory sandbox that was mentioned recently, and how do you envision it being implemented? What are the prerequisites? Is it purely for example, blockchain-based solutions, or would crypto companies be included in that? And then what are the prerequisites for companies?
Okay. So we, as the IFWG, we are in the process of implementing what we call an innovation hub. So the innovation hub would consist of 3 structures. The first one is the regulatory guidance unit. Second one is what we call this sandbox, and I think that's probably more what you're referring to. And the last one is the accelerator. So we are at an advanced stage of implementation. The go live or the launch should happen within the next couple of months. The specific criteria that's applied, I think clarity would be provided once it is officially launched. And I don't think it will be a cohort approach. So it's not a specific product or service. I think it's a group of entities that will be taken through that process. But part of the launch, we'll elaborate more on that.
Thank you.
All right. Anrich, thank you. Take it as a compliment that you had so many questions based on a great presentation. So thanks very much. Please, I think it's difficult sometimes for a regulator to stand in front of an audience like us, talking about blockchain, cryptocurrencies, and other illicit activities. So thank you for being here.
Okay.
All right.
Thank you.